where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, the bond crisis is over already in one day. That's what we're going to talk about. I was trying to cover that in the Substack last night and bring some clarity. Let's get into tonight's video. Well, welcome everyone. It is Thursday night. We've got a long weekend ahead of us, the Indy 500 weekend of fun and barbecue for us in the U.S. here, and we'll be back. So here's going to be the schedule. I'll just start with this right now, is that the next broadcast will be Tuesday night, not Monday night. It's going to be Tuesday night, and going to take an extra day for myself here, and the same thing with the Substack. We'll start off Tuesday night for Wednesday will be the first one. I may change that. You'll know because you'll get it in your mailbox. So let's get into talking about this. I've been telling you for probably most of you going back to 2021, something like that, we're one bad auction away from disaster. And boy, did everybody try to jump on this little nasty little auction in the 20-year. And I tried to cover this as well as I could in the Substack last night. And if you don't have that, it's kendallreport.substack.com. And what I was talking about is that no one knows that the 20-year maturity, nobody goes to that auction anyway. Just a couple people that are at every auction, but nobody shows up. The big institutions don't show up. It's considered to be a bastard maturity. It's there to fill the gap. It's a fairly small gap. And so when that thing blew up yesterday, everybody is on it. You can't go on X without seeing stories, everything. And even my favorite guy, Ray Dalio, had to show up and teach us little ones how the system works again. His videos just frustrate me, man. I idolized that guy back in the 90s, mid 80s, 90s, when I found out about him, and on until he became a public figure. If I could get $1 for every time he's told us about the 100-year, debt cycle and all of this, and it's all coming to an end. But meanwhile, he seems to still have investments and holdings. And I keep arguing, if anybody believed this crap they put on Twitter, that this is it, they would be in their bunker. They wouldn't be telling you about it. Okay, if the bond market were to go down, it is indeed, according to Mr. Dalio, and I will tell you the same, and I told you last night and before, the bond market is really the foundation of everything. It's the biggest trading market there is next to currency, right? And currencies are more about flows. Bonds are more about, understanding how you're going to get your money back. I went through a talk about that the other day. And so, the bonds are big. That was a pretty nasty auction. If that had been a primary auction, meaning 10, 5, 2, something like that, we'd be talking about it in a much different way. All of a sudden, bond market rallies 1%, markets go up, everything's fine. Why are they fine today and they weren't yesterday for a few minutes? Because it wasn't a material issue. And most of these things can be overcome, even if there was a bad auction in a 10-year, or we'll call the primary source. If you look at all the refundings and all the auctions that are done, the big money is being out in those maturities I'm talking about. Forget the short end of the Treasury bills, but we get to 2-year and beyond. And even a 7 years kind of a little insert. It's sort of like the 20, But the 2 5s, 10s, 30s, that's where all the money, and most of it is 2 5 10s. And if one of those fails, then we're going to have a much different. If we had the same kind of tail, same kind of action, then it would be an issue. So let's put this one behind us. Just like if you remember a couple of years ago, I'm going to air quote the banking crisis, and all that. People want to replay 2008 and do all those things. There's very unlikely that any of those things are going to happen. However, I'm going to put however in here. I have been discussing the technicals in the bonds. I think that's important. And some of the things that Mr. DeLeo talked about is what I've been telling you as well. You have to watch. You can see the flows that I've been showing you when we do the longer term, when we go out 30,000 feet up and look at these charts. You can see the monthly, there's definite flow and continuing trends going on in gold to the upside, Bitcoin to the upside. You've got on the downside, you still have, the Dow is still in a pretty big trend down when you start to look out from that standpoint. And the treasuries still have on the back end of the curve, definitely have a bias to higher yields. And, and one of the things that I think is important, some people seem to think it's a problem when the back end goes up and the front end stays down. It's not. It's more of a steepener. The 20-year would have, if anything, would have caused a hump, what's called a humpback. And it's really just one little spike. So if you take all the 20-year auctions and average them out and look at that maturity range, it didn't change a lot except for the most recent auction. All right, I think I'm done with that. Let's talk about, we're going to close out the week. One of the things, and I've run the data sheet already. I apologize for being a few minutes late. I was having a little issue with technology around here. But when we look at go through the S&P, you'll see we still have that bullish mode still in place. It won't go anywhere. It's very steady. We just keep climbing. We had a couple of days down. I'll show you all this details here, just kind of give you a big broad stroke here, is that we're looking at the, databases backing off, as we talked about yesterday. We're seeing that rotation start, which is a maturity rotation in between cycles. So I was thinking about this when getting ready for today's show, is I need to show you how the cycle goes. I've got a picture in my mind. Maybe if I can't do it, Gronk can. We'll see, or one of the AIs can put this imagery together, what I want to show. So anyway, other than that, there's not a lot of news coming out that I was looking at. I'm just grabbing something here to look at some news that is possible, and there really isn't much of anything out there. And we knew this was a pretty benign week. There's some real estate news coming out that's normally, or has been over the last several weeks, just kind of flattening and continuing to decline. There's lots of issues starting to come into the real estate markets as we sit here right now. So I think the plan for tonight will be for us to just kind of go through the normal cycle, see where we end up. If we end up early, I'll try to answer some questions, and possibly if there's we'll just answer some questions, do what we did yesterday. So let's go ahead and get into the S&P. So this is this pattern that we've been watching, and we go all the way back to the famous Wednesday of April, was April 9th. And so we're coming here right now, we're been like a month and a half, 6 weeks here, and we've normalized. If we look at where we were before all of the noise came in from the tariffs, we were right here. If I just put a cursor over here, 57.69, 59.05. So we were in that range. Now we come over to where we are now. Oh, surprise, 57.60 to 50, 59. We printed almost 5,600. I'm sorry, 5,900. 5,600 is this range just kind of comes back into our life. It's sort of like, what was it when we went through the pandemic? You know, everybody was talking about, well, we want to get back to 2019, where we were before it started. So this is the same thing what we've just seen in a very short-term view. Here's where we were. We had all this excitement and volatility, and now we're back to that point. So as I've said numerous times, is nothing's changed between those 2 points as well. We're still looking at, tariffs. We'll call it 10% across the board. There's a couple other little things going on in between. Somebody pointed out that, no one ever adheres to tariffs. Well, that's because there's no reciprocal or no accountability. We'll see if Trump and the Treasury and all of these people can actually be true to their word and get things going. And, and in the opening comments, I didn't talk about the tax bill, but the tax bill got also done, so we don't have to worry about the big tax increase and all of those things. And I believe everything that Trump said, no taxes on tips, no taxes on overtime, all of those things that came out that he said got passed by one vote or something like that. So it was nothing spectacular and overwhelming vote, but it got done. And so I think that's the other stabilizing fact that we're seeing here. Right now, it's interesting. It always frustrates me because the way that TradingView closes out their day and where they call the end of the day, and I've got TradeStation up above me here. I've got two monitors up here with trading monitors up here, and we got a +4 over there and a -7. Okay, so when I'm doing these shows, sometimes I'm like, are we up 4 or down 7? So I think TradeStation closes on the hour with the cash is where they zero out the futures. I believe it could be quarter after, but regardless of that, we're really just kind of flat as we're coming in here, and there's not a lot of change. The only thing that is happening is that the PPMs are continuing to kind of move, lose some momentum, and I think that is reflective when we look at the database and all of that. So I did it again. I jumped right into the treasure, and I'm supposed to be over at the database right now. It's okay. We'll come back to it here. But this is the formation. So let's tie together the database here, and just so we can see what's going on. So I'll come back over here. As we take a look here, I'll zoom in a bit, and we're at 65.49. We were at just a couple of days ago, we were at 71, so we're starting to come off here. We got another 930 sell signals versus 263 new buys. So we definitely have this is, I think, the third day in a row we have a negative rotation going on here. And what I would like to be able to illustrate when I was talking about the image, what I would try to illustrate is that there's, within a trend, this database is going to go from up to like 70, and then it comes down to 52, 58, and then it goes back up. It doesn't quite go higher than 70, and it flows. There's usually about 3 ebbs and flows into one cycle within a intermediate cycle. So one of the things that we'll get on Friday night is the run of the intermediate. And just to flash over to the intermediate for a second here, what we're getting is we're at 4209 on the intermediate database. So we're right at that magical 42. And the fact is, even though we've drifted off from 72 down into the 60 handle on the daily, I don't see that being enough. I think we still can get some more positive rotation into the intermediate. So we start to get much over 42. All of a sudden, we're continuing to change that picture from the standpoint of the forward-looking part of the database. And people, I've been told, I don't know, over the last 5 years since I've had a fair amount of people hanging around and seeing this data, that the database lags, it says. People will say, well, it does, on the intermediate, it doesn't lag. What it does is it picks up the larger trend. So when the bottoming's forming, most of that is done with the short-term models and rotation, and then we start to get traction on this. So what we have, though, is the forward-looking part of the database, the typical holding periods. And I'll zoom in on this so you can see it. Like right now, this is on the daily, 22 of 34. If I go back over here and go to the weekly, and then we only have a couple longs right now, but you see the difference. Instead of talking about 34 days, all of a sudden we're looking at 9 days of 257. These are trading days, so that is a year is about 220 to 240 range. And so this one has been long forever. Check this out. The utilities has been on since March of 24. So we're way over a year. And as we look out here, we have exceeded the holding. And you know, one of the features in the 2025 outlook was utilities. And what is the thing that we're the shortest on right now? It's electricity. And even hydrocarbons with oil and gas are that I don't see that as dinosaur juice, fossil fuels. Now, there were a lot of dead animals down at the bottom of the ocean, I guess, but they're hydrocarbon fuels. And what this is really, there's a shortage of everything. So utilities, interesting enough, just kind of continues to hang in out there. I wonder if I brought this up. Let's see if I can get something of scale here that will work. Yeah, so you can see what's going on. This is our internal utilities index. So you can see a lot of noise here. Probably some kind of fourth wave where we got a 1, 2. This is the top of 3 somewhere in the ABCX, ABC. There's probably a little more consolidation, but there's probably a whole nother leg up on this utility index. And we're at a point where we can get a trigger, just because all the moving averages have come in, and the trends are starting to be questionable a little bit. And if we went in and tried to dig into some deep Elliott wave, we might be able to come up with something that would suggest that we've got, maybe there's a fifth wave failure in there, and that's going to happen. But we're a lot closer exiting that, but that's the one thing. So here's what we're going to be looking for as we come into Friday's run. I won't get to talk to you again until Tuesday night, but the pattern that we're going to look at is, do we get any more new traction on sectors? Right now, the only one is transportation, which is one of the big winners. If I went back to the daily, we could see that transportation on a short-term basis was where kind of led the way off the lows, actually. But now what we want to see is more sectors start to come in on an intermediate level, and I would like to see it be somewhat material. Okay. I'm going to look at something here just to see if I can get something on your screen here. Yeah, I think I can pull this over. Let me see if I can pull this over. So, I actually want to keep this floating. I will show you this. This is basically, this is the remake of the screen that you're looking at. And I have a 32-inch vertical monitor over there, but you can see you know what? This is not the one I wanted. I apologize. I got the wrong one. You know what? I don't have it there, but I'm going to show it to you here. Okay, this is from the Substack. I can bring it up here. Okay, so what's happened is this is the new AI version I'm working on for the WaveTech. What you see every day is the old 2002 dashboard. This is the new dashboard, and there's some things that I've built in, looking for divergences between the models, weeklies, and all of that. So there's quite a bit on. I could spend probably 20 minutes explaining this dashboard, which I'm not going to do. And this is an interactive dashboard, but this breaks down all the sectors. And the reason why I brought this up, there's some elements here from this standpoint. It actually does analysis of what I'm going through with you every day. I'm building in this analysis. I updated some of this sheet last night, and I ended up getting to bed at 7 a.m. New York time because of this sheet last night. But the reason why I bring this up, but it actually brings in some different analysis of what's going on within the system. And one of the things that WaveTech's going to be doing in the future is actually doing some maturity analysis. When I show you all of the things here on this, this has got another tab here which shows us what the duration of different sectors are here right now. So the reason why I bring that up, it's highlighting what I'm telling you on this screen here, is that what we're seeing is that rotation starting to come in, and I'm building in the logic right now so it can identify these things. Just like I'm going through a daily analysis every day with you, the software is going to do that analysis that I do every day and update. And there will be, the plan is there's going to be a potential to just click a button, bring up an executive summary of what's going on with the database. And so I taught the other data sheet that I show you every night. I taught you that to, this sheet here. I've been training this sheet to think like me when it looks at the ppms and et cetera. So the same thing is going on with WaveTech right now. So it's pretty deep into the process. I still have a couple more of the screens that are in WaveTech to rebuild, and then we got to put Humpty Dumpty all together and get them to read all the data and do the thing. So it's, but I just show you that because this is what I'm trying to explain to you when I'm going through the database, what the rotation looks like. And I have a PhD in the database because I built it. I'm the creator of the database, but I've also followed it and been writing about it for over 3 decades. So I know this thing really well. I know the characteristics. It's a lot of what drives my analysis. It's the one that keeps me pointed in the right direction. And that was always the goal of everything that I've done, is somehow you just want to have something that keeps you looking in the right direction. If you can stay in the right direction, you'll make fewer mistakes. As those of you who've been around me in trading rooms and stuff, the art of making money in the markets is the art of eliminating the mistakes that you make, and especially the emotional ones. So being data driven, being all this kind of stuff, this is a perspective I'm bringing you. So now I'm bringing that perspective because of AI and these APIs that I can now use. I can actually get the thought process of how to look at the data when these shifts are happening. I built in when these triggers happen and how to anticipate. There's some probabilities as well that's been being built in. So it's been a lot of fun actually to kind of rebuild my own world. So I'm kind of showing you pieces as it's all coming together. But the database, we're going to come into Friday. I think there's some rotation that's going to cover, even though we're seeing the short-term database come in a little bit, that's going to happen. So back to S&P, okay? Sorry about not going into the next segment properly. But this all ties together with what I'm telling you with the database on a short term, which is going to be more attached to this daily flow, is starting to roll over, and that's gradually going to see as we get down, possibly down to this 21, or we stay in this sideways mode, we're going to see the database start to contract in the number of bullish elements that are in there. And so when you go from just looking at trend lines and moving averages and indexes, and you start to go into in the databases around 14,700 symbols, and those are individual stocks, ETFs, and mutual funds are in there as well. But what it does, it just gives that general perspective of the flow of the trends and the cash flow in the markets. And right now, on a short-term basis, still pretty strong. Just some rotation, some of the early trades rotating out, and then we'll see them start to come back in, and that takes 2 to 3 weeks. So what we're seeing here on the screen is that we're probably going to trade into these moving averages. What I've been talking about, everything's flatlined right now. And like I said, if we go to March, we were at, I'm just 58.13. We come over here, we're still 58.13. We're trading 58.61. So we basically, that 200 day, we dipped below it, and now we're back above it a little bit. We did basically test it yesterday. I still think there's a possibility that we get through it a little bit, and that will be probably a buying opportunity more than anything. I'm not sure we're going to rotate over on the thumbnails and some of the clickbait stuff. I've been playing into the flow of people looking for this bond market disaster, and as I said in my opening comments, that really isn't happening. So we're about halfway through. We're going to go ahead and move to NASDAQ, which is going to look very similar, and then we'll touch on the treasuries because they're definitely in focus, and then we'll do gold and Bitcoin, and then we'll see what happens after that. Okay, so NASDAQ, like I said, patterns are similar. It's a little bit stronger, though. One of the things I've been doing in the Substack, I've been doing some nights I'll do a bit of a comparative analysis. We'll line up, see what the indicators look like versus the S&P versus the NASDAQ, and I always tell you they're cousins. NASDAQ has a higher beta, but for the most part, we haven't gotten much under the 10-period moving average, and it's finally starting to break its second derivative here. So now there's a building story that says we're going to come back to the 21. Now, you can see we also got almost to the 200 on the backside, meaning we're trading back to it the other day, but we're quite a ways away from that on the NASDAQ. So that little gap is basically your relative beta or from NASDAQ versus the S&P. So you have a little higher, stronger profile than it, and that's usually the case. In the past, I've written about that, and I'm always going the NASDAQ's stronger. Well, it's just the relative beta and the volatility ranges are a little bit bigger just because of the way that the index trades. But over and over, they're generally the same trends with slightly different differences, and the NASDAQ continues to be the leader from the standpoint of trends. So we see this finally starting to break here. We're getting through the second derivative on PPM1. Let me draw this in because I always think I'm explaining myself well, and I'm not sure I am. So that would be, so the thing we're going to be looking for draw a line here. This is going to be the primary, what I call demand line, the 21. That is coming in. Unfortunately, I can't get to the value right now, but this 10, this is the 10 where we're just breaking through, and right here is the break. Let me fatten this up. This is where we're breaking right here, and you can see the projection of all of these indicators are going to start to roll over, where you start to see the all this stuff start to move to the downside. All of this stuff, we're looking here, it's going to happen somewhere around June or so, something like that. And and you can see everything comes basically to a twist point here as well. Like right over here is where all the moving averages are forecasted to kind of come together. And what has to happen is the market is going to go sideways. So we are potentially, there's an old, dog days of summer. As we come into June and July, we could be in this really just choppy cossideways, no decisions being made. That's a lot of summers. We could probably start the show off with the old song "Summertime Blues," because that's what we're looking at. And you can see here, I'm just going to draw in all of these patterns here. I'll just leave this big and fat so you can see them. But everything from the projection standpoint at the moment is showing us that we're going to start to roll a little bit. No cliffs available right now. Something could happen. Maybe the bond market does get sick, and we see, some of these primary auctions go sideways, and that would be very unnerving. And if that happens. But for right now, it just looks like pretty normal type activity, and we're just reconsolidating. And like I said, I'll just leave this big fat thing. But that's kind of our line here from the standpoint of this. This is where we were over here, and this is where we're going to end up. So it's not going to be a lot of fun unless we get some big kick in volatility. Something happens. We certainly have the ingredients for the profile to change. At a snap of a finger, everything can change. But for right now, the forecast, everything's kind of going over. It almost seems like the messaging, it looks like Jay Powell escaped Trump again. The Supreme Court said Trump can fire some people in certain agencies, but he can't get to the Fed. And Powell's out of here the second his job's up. He's gone. I think he's still on the board, has some other stuff that he's still into the level. But I've been watching to see what kind of noise we're getting, who's going to take over Powell's job. But for right now, he's on the job, and like I've said before, just to bring the Fed in the room for a minute, we're going to go to Treasuries next. So I'll talk to it a little bit more, but the Fed is not a real factor at the moment. So let's go ahead and let's just do that. Let's go on to the Treasuries. So here's the big rejection. This is yesterday. This is daily. We got an RTX sell signal, which signals 1 to 2 days sideways, and what we got was kind of a higher opening, big reversal this morning. So nothing. There's no lingering effect of the 5-year. In fact, it just reversed. And I talked about this yesterday. We had these V tops setting up, and that's exactly what we got going there. From that standpoint, we've got V tops. It looks like everything's peaked out. You see the algorithm, we'll call it the 3-day red dots, are heading us right back to 440, which is the top end of the range that I've been advertising and telling you folks that that's where we're going to end up. Somewhere around 440 should be the top end of the curve. Now, we printed we look yesterday. We printed 463, and so but we ended up at 455. It looks to me that this doesn't update until we get a first tick tomorrow. My guess is that the market grid turns down and we start a downward channel and we head back to 440, 435. I don't, like I said, I just, I'm trying to say this without being offensive, but once again, we see a lot of amateur voices around the markets, and you can see them everywhere. And it appears to be, some of the, I'm trying to say this without being totally offensive, but basically, a lot of these millennial so-called guys that are on here that have never seen the inside of a brokerage firm are experts because they have TradingView, and that's where they get their skills from, and yeah, you can be a pretty good, there's some good traders out there, do not get me wrong, but I'm just telling you, there's a lot of folks out there that are don't understand exactly how it works. But the bottom line is what we're seeing here is these markets are going to come in. There's a whole lot of things, by the way, folks, that, you're looking at a guy that started in 79 when interest rates were on their way to 25%, and the 30-year bond I probably got to 16 and a half, maybe close to 17, and that was the top. But and then I've been through the crash of '87. I've been through it all. I've been through all the wars. I'm the seasoned veteran, and I've seen all this stuff. And every time, every one of those wars, it felt like the end. Like '87, I've always advertised it was 40% in 3 days. It was actually 32.8% in 4 days. So it was a big move in 4 days, right? But that was it. It just kind of stopped. And by the time we came into February, March of the next year, we were at the highs or printing all-time new highs again. So, it's the United States of America, the financial systems they have the power to change things, including there's a video on my website right now that shows it's called Flashback to the Flash Crash. And what did they do that day? They removed a bunch of trades. The CME, not the CME, but the London Exchange did the same thing with some of these trades in uranium and other things. These guys will just make things go away. It's crazy, it's corrupt, and it's wrong. But if they don't do that, then there is no exchange. And I've seen a couple of these events that could have taken things down. So anyway, watch that video. It's kind of a fun video to watch. It's called Flashback to the Flash Crash. It's on the Kendall Report YouTube channel. Anyway, I think it's one of the featured videos on there, but it's a fun watch, and you get to see me like 14 years younger. Okay, so anyway, but the point of all this is that the treasuries, this is a big market, and to break this market, it breaks everything. And I will agree with Ray Dalio on that. It is the foundation of everything. And it's like the thing that can't default. And if it did default, then you better have spears and bullets, because that's what you're going to need to survive. It's not going to be Bitcoin, I can tell you that. But the point is that all of this stuff is so big, these markets are so big that you're going to see stability when things go wrong. There's lots of things. I always say, if you've got the legislature, you got the laws, and you got the printing press, you can make magic happen. And we've all seen it happen. Anybody's been trading for now 20 years have seen two big events with the pandemic and the GFC. Seen it happen, been there, watched it happen. That's the way it goes. So, I'm never, if I turn into the doomsayer, then I don't know if that's good or bad. I've even lost my mind or lost my way, because I never go down that path. I'm not saying I don't predict that the big market moves and those type of things up or down, but I'm just saying the end of it, I don't go there because that's a fool's errand to do that. All right, so let's move on. We've got 40 minutes in. Let's go ahead and let's do the Dower because I think that needs to be watched as well. So Dower trying to set up a little bottom. There's still some downward pressure. I want to go to the weekly real quick because there's something there that I think is worth watching. This little this formation that's coming in here, it's basically around the bottom. We came back down to this lower end, and I was talking about this, I believe, last week where we come down. We're all the way to the STX level. That is on, let me just zoom in on this so we can all see it. 99.33, and we're looking at 99.33 is the low. So exactly to the STX level, we hit that exactly. And right now we're on 99.80. So we're off about 50 points off of that low. So we did hit the extreme. But what we're seeing here is we look at the, bear with me a second. That's interesting. What I want to do is resize this, and it's not letting me do it. All right. Always fun to be live. I wanted to resize this PPM2 here. Basically, what we're seeing is what we're seeing in everything. Basically a collapse and consolidation of the, if it's a downtrend, consolidating down here, it looks to me that we're going to see some improvement as we come to the end of the month. Just in the inverse, as we're seeing the potential for things to soften up as we come into the end in the first couple of weeks of June. So everything's inverse that should be, right? So so this Dower, I think we're not in the moment where we have to worry about it collapsing. Therefore, this kind of coincides with what I've just shown you with the treasuries coming down into that 440 and maybe between 430, 440 after printing up the, the 460 handle. Then we'll see it come back in from that standpoint, and we'll see stabilization. So the Dower should stabilize, go up. The interest rate should stabilize, go down. Okay, so these are the things that I think we have to watch pretty closely right now, and I'll probably be bringing these up from day to day just as the patterns unfold. All we want to see is that symmetry where one's going up, the other one's coming down, and that's going to be a normalization. It won't be probably until we get well into maybe past July. We'll start to have conversations about changes and trends and things of that sort, depending on what happens. But it looks to me everything's stabilized. As far as someone coming up, and there's always we'll call it the black swan. It has to be. The only way a black swan can happen is nobody can know about it, and it can't be predicted. So if something pops in that we do get material issues coming into some of the auctions coming in, the good news is when it comes to auctions on treasuries and these events that I'm talking about right now, they happen every week now. It used to be, every once a quarter. When I was a young guy coming into the markets, we had these, they called them quarterly refunding auctions, and there'd be a big tranche of them. Well, they have quarterly refundings every week now. So we have lots of opportunity for these auctions to see. And once again, just pay attention to the primaries, just kind of tying this together. The 2 5s, 10s, maybe the 7s to a degree, but they're kind of 7s and 20s are kind of out of sequence. So 2, 5, 10, and 30s to a degree. No one really, it's really the 2, 5, 10s as the ones you really want to watch. The front end of the curve is going to be dominated by the Fed and the overnight rates. That's pretty much static. They can move around a little bit, but once you get to that 2 years, more market rates, 2, 5, 10 market rates that's where we want to pay attention, and we want to pay attention to what's going on with the dollar. The dollar turns south, then we'll probably see these 460 prints on the 10 and maybe something worse. And I've told you 4.72 is kind of my high water mark. If it breaks that, then there's something else going on then. All right, so let's move on. Let's do gold. Stay with this weekly. This is what I was talking about. If we look at in the opening comments, I was talking about how all of this stuff is really flowing in the same direction. We've got, Bitcoin. We'll bring up Bitcoin here in a minute. But we got the flows in gold still staying up. We bounced off this 10-week moving average. We bounced off pretty good. We're up this week. We're up $94 off the lows. We're back at 3,300. If we bring this over to a daily for a second, we're getting some Fibonacci targets up. I'm going to expand this so you can see. So we've got some Fibonacci targets right now, 3362, 3453, 3500. So these are basically forecasting a retest of the highs. The upward band is right at pretty much at the high over here, which we're looking at 3509, and the fib target 3505. So we're looking at this is forecasting this. What we have working against it right now is the market grid is kind of trying to form back down. The red dot indicator is suggesting we're really going to just kind of consolidate more. And I lend that way. We're seeing some acceleration, but we're not getting confirmation. So when we see the fib, those of you that have the indicators, if you don't, you can check out kendallreport.com/indicators24. You can see here, but the bottom line is what you see here is when you see these upward fib targets being generated by the logic, you want to see if you're getting confirmation of the PPM. So if we had all the forecasts in the same way, then I would be talking more about the probabilities of reaching these upward fib targets. As it turns right now, we're just seeing a bit of a sideways twist here. And we're going back to the weeklies here real quick. This is even a bit more revealing, as we've got this upward slope here, but we're seeing momentum die off. But when I put you can see my cursor here on the projection at the lowest projection that is out in June, it's still a positive 0.17. So even though the momentum looks like this is forecasting downward prices, it's not. What it's forecasting, you can see here, is this dotted line is still, all it's doing is slowing at the rate at which the angle of attack is going. And at some stage it becomes vulnerable to a penetration depending on the configuration. But for the most part, we're likely to stay above the 10. This is a weekly chart. The extreme would be coming down, over here to 3270 or something. That and you would want to probably be buying both hands at that phase. All right, so let's get to Bitcoin weekly. We have these new fib targets up here. And so we have these three targets. 134, 157. Let me blow these up over here so you can see them. Down here in the right-hand corner. So 134, 157, and 171. That is where these targets, these dots, and they just came in this week. So these are new fib targets on the upside. I think 130, I've mentioned this 131, 134 is a target number. So we should go continue up. What we're seeing though, and just real quick, is the algos are suggesting that we have until mid-June. So what I've been saying in the last couple sessions and over the last week or so is it's time to go. Okay, so we're printing printed up to 112. That's a new high that has printed in this current session, and so there's a 113 resistance, and then above that it's a clean shot to 21 to 34. And so far I think the market's acted pretty good. It's not been this big stampede, and like I've been saying, I still think this is the point in time where a lot of validation is going to happen for Bitcoin. If we're barely above the old highs at 109. Let me just see if I can find this high right here. Yeah, 109,300. So we're 111,370, which is good. I've been telling you, we got to stay over 105. We're going 105, and there is no path that would be good if we trade under 100 right now, 100,000. Nothing good's going to come out of that. Maybe we go down to 99, bounce back to 105, and then you got to probably be a seller. I'm not predicting that. What I'm showing right now is that we're probably going at least to fib target 1, which is 134, but there's some obstacles in the way, 113, 121, and then 134 are numbers that are marked in there off of other time sequences that I've studied quite a bit. So that will be the thing to watch for here. So it's go time now. Just watch these numbers. There's not really much more to say about Bitcoin other than that. And now there'll be a write-up tonight, as always, and the deep details in all of the algos. Okay, folks, come up and see what kind of stuff is going on in the comment line here. Yeah, so David, why would a dollar collapse if that happens? We'd be more exactly. That's what I'm trying to say, David. Thank you for echoing and clarifying. Yeah, it's highly unlikely, like so improbable, it's not going to happen. Let me just see if there's anything else out here. Yeah, I know. I see Michael is saying so many tech companies lower the outlook, laying off people, so many saying they can't put food on the table. I don't know where that is. I don't see any starving people around, but maybe I'm not connected well. Yeah, I mean, I haven't been to McDonald's in decades, so let's see here. I'm just looking at some comments here, folks, so bear with me. See if there's... Yeah, BMA, a few weeks ago, I called for all-time new high. There's still no all-time new high. I don't see it yet. It was obvious that the draft dodger Trump locked. Man, dude, you need to get alive. Let's see here. I was hoping you had something intelligent to say. But okay, let's go. Yeah, so big beautiful bill, solar tax credits 26 keeps manufacturing credits possible. Uh, yeah, so let's just kind of close here. Uh, um, I think there more analysis has to be. I kind of spent a fair amount of time in the Substack last night, really discrediting the CBO is, folks. I have worked in major wirehouse research departments. Um, my good friend Ed Yardini, Ed, we both worked at the same firm when we were both young men. He was bad then. He's a little better now. He's actually made a couple of good calls, but we used to fade our Yardini. So if you work at a major institution and you're an institutional trader like I was, everybody on the desk, when the economist of the firm says something, we're fading them. We're like taking the other side, especially on the prop trader side. You know, it's these guys are never right. The research departments are marketing departments, and the CBO is got the worst track record of anybody, and so a lot of things that are flow around the markets, and this is sort of what I was talking about in earlier in the broadcast and on the opening, is there's just a lot of noise around the markets, and these CBO guys are, they're not neutral. They never see any growth. They have GDP, mapped out for 1.5% for as far as you can see. They're telling you that for 30 years there's not going to be any change. It's just going to get worse and worse and worse. I mean, these people are idiots. Okay, so if you're making decisions, and that's, but these are why, if you're very careful about what you look at and what you hear, is going to be better for you. I stay in my little house. I look and listen to some of the noise and go, okay, no, I don't listen to it. Like, like guys like this guy calling Trump a draft dodger. I don't care. The best thing ever happened to me is I didn't go to Vietnam, okay? And I didn't dodge the draft. I just got a good lotto number. I got 326, okay? And they didn't call me. 1970. So I felt like I won the lotto back then when I didn't have to go to Vietnam. I got buddies that died, and I got people that, guys that have been dead for years because of the crap that happened to them in that war. And so, I'm just telling you, I try to stay out of the noise the best you can. Find some good technicals. That's why we put the indicators out there. I'm working on some really cool stuff right now, folks. I'm just anxious to get it. I got a whole pile of really cool stuff, and I'm trying to get the puzzle put together right now, because it's things that, because of AI, I saw somebody really put a nice comment. I think it was on Twitter, might have been on YouTube channel. But the little AI trades that come out of the Substack every night, that AI has been directed by the configuration and the logic that I give to it to think and look at the indicators and to come up with these ranges. So it's been pretty crafty. It's pretty interesting what some of those algos have done interacting with other types of math. And so there's some really good stuff, and the best is yet to be seen. And that's a fun statement when I'm hoping. I know I have a fair amount of folks my age watching and a little bit older. I've met some of you folks, and to be 73 and still looking forward is a good thing. So anyway, with that note, that's a great note to finish on. We'll call it quits here. Enjoy the music. I'm going to put a video out. I have about 20 songs that I put together. So I'm a heavy metal, German industrial metal guy. So I'll put it out there. I'll put it on the channel in some video. I'm trying to figure out how to format it right now. Anyway, have a great long weekend. Enjoy the race on Sunday. And being an Indiana boy, I know that's always been a big excitement. So thanks for watching, everyone. We'll talk to you on Tuesday night.